Yo, what's up, you guys? Welcome back to another video. Firstly, that was a few seconds of silence for the people who blew their accounts through the CPI. Today, we're going to talk about the CPI report that came through hotter than expected. But before we get there, let's go through some questions that we received. First question, right at the bottom over here, from the bottom of the barrel over here, that says here, hi Rolly, nice informative video. Do you pass alpha markets perhaps? Is alpha markets not that guy, Jason Noah? I think he's the guy promoting people to pass FTMO. I'll just have a look again. Here we go. Mr. What's up? I've answered that. Could you please do a video on CPI? I'll be doing it today. I'm actually busy doing it. I really hope that I answered. Oritile, brother. Rolly, thank you answering my question the last time. Excuse me. Proper risk and risk management. If an account is at $200 and I lose at 2%, you should be stop trading for the day. Would it be good to calculate the position size on the new amount, creating a compound effect? Yeah, you will have to recalculate it on the initial balance at a 1% risk, because your reward always needs to be 2 times or 3 times greater. So if you do lose 2%, that means you lost 2 trades. If you take another 2 trades and you win both, you should be making 4% or 6% on there as well. Next up, Mr. Mohammed saying, thanks for the feedback. I'll definitely focus on economic data too. Just watch this video and you'll see exactly what it is I'm speaking about. Mr. Mbale saying, thank you for this. Very informative. Plus, all these local brokers are hiding on someone else's license, which is not unfair at all. Exactly, because if you need to complain, what do you complain about? Mr. Gaston saying, man, oh, Forex Global, let's go, boy. Drop that video. Llewellyn saying, thanks, this video was a real eye-opener. It's sad to see how people suffer so much in the land that has got so many potential. It's all about who you know. It's not about what you know. Yeah, if you know people, you can get anything you want, my friend. The way, do you know how much money is needed to start a broker? Probably anything over $1 million. I know you need a lot of money. I don't know how much. Now I understand why they're not regulated. Yes, they're lazy. Hey man, love the content you've created. It's been really helpful. Keep up the good work. Thank you. Glad you enjoyed. ID13, are you FSCA regulated? Now, before we get started, the word regulated, I think there's a confusion, because the word regulated means that you are following certain laws and regulations. Now, you probably asking, are you licensed? No, I don't have a license. However, I am regulated to offer financial services without the supervision of an FSP in all categories of FSPs there as well. Now, if I was going to start a brokerage or an investment firm, or if I was going to be a short-term insurance company or offer any financial products, I would then need to get a license for that. So to be a broker, you need a license. The word regulated refers to laws and regulations that are put in place by the FSCA for FSPs to follow. And if they are deemed not regulated, that means they are not following through with the laws and regulations that has been put in place. Now, that is what FSPs need. They need a license. Then you get a Cat 2 and a Cat 1 is basically people who does investment schemes. No, not investment schemes. People that trade on behalf of other people. They also need licenses in those categories as well. Unfortunately, I don't offer any financial advice. I don't sell any financial products, and I'm not an FSP as well. But I am regulated, so I do follow guidelines in regards to the financial industry, also for my personal capacity as well. Any case, let's clear this, guys. Let's jump straight into it. Firstly, I know a lot of people that blew their account here on gold. There's no question about that. You can clearly see the market went for that buy stops and that sell stops, right? Took yours and then said, no, I'm not going anywhere. Any case, let's look at the CPI report. It says here, August core inflation excluding food and energy rose 0.3% hotter than expected. Now, there's a lot of people that's going to be very upset with their wife when they get home tonight. The wife might be upset with the husband because they both blew their accounts trying to trade CPI following that capital markets or whatever that guy is that is promoting people to trade, that want to incentivize people to trade throughout CPI, but they can't. But the broker don't even pay out the people. How do you promote? How do you promote people to trade and deposit 2,000, 3,000 Rand to trade CPI, knowing that you might not even pay them out. No, man, leave that. Any case, the consumer price index rose 0.6% in August, the biggest monthly gain in 2023. Just when you think you're going forward with the index, you are actually going backwards. Of 2023, inflation gauge rose 3.7 from a year ago. The core CPI increased 0.3% and 4.3% respectively, against estimates of 0.2% and the 4.3%. Fed official focus on more core, as it provides a better indication of where inflation is heading over the long term. Energy prices, Fed months gain. Energy prices, Fed months of gain, rising 5.6 on the month, an increase that included a 10.6 there. Treasury yields were up. 30-year bond was enjoying this. The 10-year and the 5-year and the 2-year, they were all enjoying that. Apart from them, the stock market also very much enjoyed that report there as well as it came out. We obviously saw that the stock market was quite bullish, but as the data sinks, we now understand why it won't be turning green for any time sooner. Now, you're probably sitting there and thinking, ooh, okay, what do you mean? I'll explain to you exactly what this means also. Gold steadies as traders assess impact of US CPI on the Fed plan. Now, I'm not sure if you guys know that on the 25th of August, Mr. Powell came out and he said that we will need to proceed carefully with furthering hiking interest rates. Unfortunately, this is how the world of economy work. When inflation is on the rise, that means that people are spending. Now, the way you get people to spend less is if you hike interest rates. Now, Powell was probably thinking, okay, the inflation was going to cool down, so I'm going to tell the people we're not going to hike the interest rates. Unfortunately for Powell now, he's going to have to build a time machine, go back into time and say, hey, I'm sorry about what I said, but it seems like we are going to hike the interest rates in our next meeting. And that is exactly what I am expecting to take place next week when the Feds meet in the FOMC meetings, the big house. I do expect the Fed to hike the interest rate, and that's going to boost the dollar even more, because the only way to cool down inflation and to meet the Fed's target of 2% for the year is probably to hike interest rates again. Now, if that doesn't sound new to you, I don't know what does. It says your gold steadies again on the CPI data. It says your gold steadied on Wednesday after retreating immediately following data showing that an acceleration in the US consumer prices and expectations that the inflation reading may not prompt a big change in the Federal Reserve interest rate strategy. And now you know how the news go. They say that on expectations that the inflation reading may not prompt a big chance that the Fed might go and hike the interest rate. Now, gold was up at 1,912 ounce, the dollar per ounce, and gold futures were also steady at $1,935.40 per ounce. The Labor Department that showed headline and core CPI on August rose 0.6 to 0.3% respectively month over month. Economists were expecting an increase of 0.6. Well, it's not about what you expect, it's about what's going to happen. Now, guys, let me explain this to you how this happened, right? Let me explain to you what happens, right? Now, I've made a couple of videos on this. Now, there is no question to whether or not these markets are going to move up or down. There's only one way for these markets to move, and that is down. I do expect the dollar to increase in value based of where we are now, because the negative reading in the CPI basically means that the Fed needs to go back to the 25th and they should basically reevaluate their plan. Now, I'm going to do a full breakdown. I'll give you guys a quick summary of what we can expect to take place over here. But I do expect the market to continue lower. I do expect gold to go and hit this low over here. So basically what we need to look out for is we have structure around this area. Pardon the interruption, people. This is your captain speaking. Sorry about that, guys. So we are basically going to be bearish on this. One thing I do want to keep in mind is that, or what I would ideally want to see is we have the core PPI also coming through tomorrow. So I would say I'm going to do the full breakdown for you guys when the data is released on Friday. We've got some more high impact news coming through for these 2 days, But what I can tell you is that there is no way that the dollar is going to retreat back after this news here once again. Now, guys, like I said before, I expect the market to continue higher, and this still stands as we expect the index to increase in value. And I'm just going to give you guys like a quick breakdown. This is now probably this, because of the situation with Apple, I do still anticipate this move. However, it would be very difficult to speak about this. So we have new structure that has been created, and we do probably see this market basically just moving like this. Remember, guys, if you do get a clear break of structure, and if you do get a clear break of structure. Next up, we've got the Dow Jones. The Dow Jones reached the target as we anticipated, and that was the end of the line for the Dow Jones. I do expect the Dow Jones to get weaker and go as low as this low. Next up, we do have the S&P 500. Okay, the S&P 500 did break above structure, came back, has printed an equal low, similar structure that we can see on the NASDAQ. So again, guys, remember, because we still have some PPI coming through, I do anticipate the long-term move. I do anticipate for the market to break below the structure and continue lower. And then we've got gold. Like I said, I do expect gold is currently gold had broken below structure. I do still expect gold to continue lower to that levels over there, and then from there, obviously, I'm gonna make another update. I'm not gonna speak about German 30. That target was reached with that candle over there. Guys, please let me know your thoughts in the comment section below about what you think about the CPI. That is it from my side. I will give you guys another update on Saturday with the 2 more days of fresh news coming out. Be safe. Don't be like those guys on what's that? I don't even know that broker's name. In any case, thank you for your time. And as always, don't forget to smash that like button. Cheers for the years.